Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Short Verticals. I'm just filling in for this webcast, but just a couple of hours ago, I had my regularly scheduled webcast series where I talk about long verticals, and in that webcast, we talked about doing a search or a scan or a screen or a filter for vertical spread trade candidates. So I thought, you know what? We talked about searching for long verticals. How about we talk about searching for short verticals today? What are the distinctions between those two screening approaches? So we're going to find and plan and place an example short vertical spread trade today. It's going to be bullish as a teaser, as a spoiler alert. We're going to be doing a bull put spread today, but I'll show you how I found it. All right. Now, before we can get to any of that, though, let me first of all say hello to everybody who's already chatting in. Great to see David and Will, JDLMI, Kelly, Robert, Life in the Fast Lane, ABQ, Bill, Richard, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you happen to be here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, those recordings are a great way to see these webcasts, but you're also invited to join us in the live stream if you'd like to be here. This is a Thursday webcast series, and we kick this one off promptly each Thursday at 2 Eastern time. Now, I also want to let you know that my good friend Rachel is going to be hanging out in the chat. She's going to be addressing any questions. Rachel Deschelle has recently joined the Schwab Education Coaching team, but man, it's great to have her here. Thanks for having my back there, Rachel. And you can also follow Rachel and me on X. You should be following your favorite presenters, your Schwab presenters on social media. If you have an X account, you can follow Rachel there at Rachel-CS. You can find me on X at Cameron May CS. You can also now follow me on LinkedIn. So if you'd like to track me down there, it's linkedin.com/in/Cameron May CS. All right. But if you reply to me on either of those platforms, I try to reply right back to you. It allows for interaction with your favorite presenters in between the live streams when the camera's not on. But let's get into this discussion of searching for credit spread trade candidates. And as we do, of course, we need to first of all consider the risks associated with trading and investing. So bear these important disclosures in mind. Options carry a high level of risk and are not suitable for all investors. The information here is for general informational purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing involves risks, including the loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount, and any investment decision you make in your self-directed account is solely your responsibility. So let's go through what we're going to be going through. Let's set an agenda for what we're going to be discussing today. First thing we're going to do is take a quick peek at what's going on with the S&P 500. For the bulls in the audience, you might want to close your eyes. It isn't pleasant today, but of course, that's in the context of the long run-up that we've already had. So, yeah, we're going to see what's going on with the S&P, and we're going to let that set the stage for our discussion of searching for and trading credit spreads. So we're going to construct a scan on the Thinkorswim desktop platform to look for potential trade candidates for vertical spreads, specifically, in this case, credit spreads. And then we're going to take one of those trade candidates and we're going to build a credit spread. We're going to place that order on the Thinkorswim desktop paper money platform. Okay. So JDLMI says, how about a build a scan or short put credit spread? Yeah, exactly. Let's see. Noodlebrand says you already have a question. Do you manage risk on short verticals? It seems almost impossible to get out of them with a wide bid-ask spread. You always lose more than you can make. So the word always is a strong phrase. Let me see if I can work that into this discussion there, though. Okay, managing the back end of the trade. We'll see if we can fit that in as we're planning this trade. But let's go right to the Thinkorswim desktop, and we're going to look at the S&P 500. Here's what I'm talking about. Sorry, bulls, this is not my fault. The S&P has been selling off today, down about 1.63% as we're talking. Yeah, I think that there are probably plenty of market observers who are keeping an eye on that government shutdown, waiting to see the end of that government shutdown and maybe expecting the markets to go up as a result. Well, that shutdown is upon us. The end of the shutdown is upon us. And yet the markets aren't taking that positive news, apparently positive news, very positively. Maybe it's just already priced in. Is this a possible scenario of, oh, now we're in a market condition where good news is bad news? If that persists, that could signal the beginning of a trend change. Now, that's a big if. We don't know. And what a trader can still observe, though, is that, boy, looking back over the last 7 months, the S&P has been climbing using this apparent price floor just as a ramp, running up and pulling back and running up and pulling back. And even with today's sell-off, we're still above that level. So for some traders who are looking for a technical trend change, there may still be work to be done on that front. And I'm going to just leave that as the assumption for today's trade scenario. All right. Let's just say that our hypothetical trader there isn't really thrilled maybe about this sell-off if they're bullish, but maybe they still think that we're likely to bounce off near-term lows and continue to head higher. Time will tell. Saivan says, I thought the shutdown ending is a good sign for the market. It could be. It doesn't seem to be at the moment, but of course there can be, there almost absolutely are other factors in play in what's driving markets from one day to the next. It's tough to just say, to hang the market's behavior entirely on one factor, right? But let's just say that our trader here is still bullish. So we're going to be planning and placing an example bullish trade today, and I already picked one. And if you were watching my long diagonals discussion a couple of hours ago, you saw why we chose this one. This was actually the product of a scan that we ran just a couple of hours ago. And unlike so many stocks out there today, if we look at ABBV, we'll see that it has been coming up rather than down, and it appears to have broken through an apparent price ceiling. So this is going to be a trade setup that we're going to be searching for. Now, there are other traders, though. The trade that we actually placed in that last webcast, and I'll show you where to find that in just a moment, was Broadcom, AVGO. And this one is actually pulled down, and we're looking for it maybe to stay above this recent support level right here. All right. But by the way, if you didn't catch that webcast that we just did just a couple of hours ago, our crew behind the scenes already has that thing up and running on the YouTube channel. So do yourselves a favor. If you haven't subscribed to our, no, I don't want to draw a line here. Let me get rid of that line. But if you haven't subscribed to our Trader Talks channel on YouTube yet, do that right now. You can go down below the live stream or just below the stream if you're watching on the archive, just below the video screen. Click on the subscribe button. It only takes a second, doesn't cost anything to do that. But our Trader Talks channel on YouTube is where we house our playlists of previous webcasts. Of course, you can join the live streams as well. But for example, I could go to playlists, and even though I just concluded this webcast a couple of hours ago, I can scroll down to look for my long verticals and diagonals series and click on view full playlist. And right at the top is finding bullish vertical spread trade candidates on Thinkorswim. There we go. So let's go look for some other bullish vertical spreads. But in this case, we're looking for credit spreads. And so you're probably going to ask the difference. What's the difference between looking for credit spreads and debit spreads? And that kind of cuts right to the heart of what's the difference between credit spreads and debit spreads overall. I've actually done a detailed breakdown. I get questions all the time. Cameron, should I trade credit spreads or debit spreads? Is one inherently, I don't know, virtuous over the other? I've been using that term a lot recently. But the short answer to that is not really. Nope. There's not a strong difference between those two. If you want to see that discussion and the evidence that I proposed for that conclusion, because I think a lot of people are going to be surprised. Credit spreads and debit spreads aren't significantly different. I don't believe you. Got to see that evidence. Here's where you might find that. Go to our channel, do a quick search for credit debit. Hit enter. And I have the options vertical showdown, trade a credit or a debit spread. In that discussion, I made what I consider to be a very strong case for the very minor distinctions between those two strategies. So with that said, guess what? The search says we're going to be doing two searches today. The searches that we're going to be conducting for credit spreads are going to be identical to the ones that we just did a couple of hours ago. I wanted to bring it to this audience to make sure that everybody gets an opportunity to see it. But for those who were here a couple of hours ago, you're going to be able to get some repetition with this. Okay. Randy says, I know this is off topic. Can you sometimes show a scan for covered calls? This is a great series. Randy, yes, I can. I actually teach a regular webcast series on trading covered calls and short puts. That's actually the name, trading covered calls and short puts. So I'll make a plan to do that there. Okay. JDLMI says, isn't credit versus debit more neutral? Nope. I'm just going to sort of shortcut right to the answer there. No, neither one of those is more neutral. Neither one is more bullish or more bearish. Neither one is inherently higher or lower probability. Neither one carries inherently a higher reward or risk. It all comes down to strike selection. Same strikes on the same stock at the same expiration are going to essentially create the same trade scenario or same potential outcomes. Yep. So yeah, you might want to check out, if that's surprising to you, you might want to look at that video. Anyway, let's go build a search. Now I'm going to be building into this search some requirements for what's happening on the chart. We're going to be looking for technical studies to be behaving in a specific way. And to do a study search, or in other words, a study filter like that, we need to be on the live platform. So I have a fake live platform that I'm going to, but just be aware that if you're trying to recreate the search that I create in this webcast, but you're doing it on Paper Money, you can't. It has to be done on the live platform. Okay, so just got some in my eye. Anyway, let's set the stage for what kind of search we're going to be conducting. So we kind of have to ask the questions, what is a spread trader looking for? If they're bullish, what are they looking for? And really this can very likely be applied to both credit spread and debit spread traders. Number one is liquidity. For some traders, they really put an emphasis on the liquidity of a stock, because if it's an illiquid stock, its options will also tend to be even more illiquid. It creates pricing issues. It makes somebody ask the question, what about getting into and out of these trades? Because it seems hard. Yeah. And it gets harder if the stock is less liquid. So for our first requirement, let's try to get as much liquidity as we can. And that might be by looking at very high capitalization companies. The largest companies tend to have the strongest trading volume. And so that's a potential quick filter for liquidity. So how do we do that? Let's go to the Thinkorswim live platform. Again, this is not a real live platform, but it functions just like one. In any case, let's go to the scan tab. And we're going to be using the default stock filter here to look for, first of all, a market capitalization. And as I proposed in my last discussion, maybe for vertical spread traders, they might want that to be a very high market capitalization. So we're looking at the very large cap companies. I'm going to put a minimum of 100,000 million, or in other words, $100 billion as a minimum market capitalization requirement. And there are about 358 companies that match that meet that criteria. Might be a surprise to some that there are 358 $100 billion companies out there, but there are. Yep. Somebody says, please add the link to the covered calls series Cameron referred to. All right, maybe Rachel can get that for you, or you know what, why not? Let's pop over here. Let's go to the playlists. And we're going to be looking for covered calls and short puts. So as we scroll down, just look for those keywords. And you'll notice right there, trading covered calls and short puts. If I click on the view full playlist, there's that playlist link. Let me copy that. Oh, you know what? Rachel beat me to it, but that's how you can find it. Thank you, Rachel. Definitely appreciate it. Let me take this back to just the channel homepage. All right, but we have now introduced what potentially a very important filter for liquidity. Next requirement for some traders, they like to trade options on stocks of a given price range. Some traders prefer lower price stocks, others prefer higher price stocks, maybe somewhere in between. Potential issue with very low price stocks is They don't tend to have very many strike prices to choose from, or not, and in a lot of cases, the lower price stocks are among the less liquid companies. They tend to be the smaller companies, but let's just say for today's discussion, just like in our last webcast, you're going to see these scans are going to be just like what I created earlier. Let's put in a minimum price of 100, maybe dial that up as high as 500. All right, now we're going to, among these very large companies priced between $100, $500, let's make some specific requirements about what's happening on the chart right at this moment. And so first thing that a trader might be looking for if they're structuring a bullish trade is maybe they want to see things looking bullish on a chart, like what we saw on AbbVie. It's been going up. It's not a guarantee it's going to continue going up, but it has at least been going up. How do we find other similar stocks? Well, maybe a trend filter might be the first thing that our trader applies. One of which, let's add a couple of trend indicators. Let's add 2 simple moving averages. Add one and add a second. The first one is going to be our 50-period moving average. For some, this is kind of a short-term to intermediate indication of trend. It can also potentially indicate short-term to intermediate levels of support and resistance. But let me click OK here. The second one is going to be a little bit longer term, intermediate to longer term. And let's go for the 100-period simple moving average for that. And let's make that a little bit thicker in its appearance on the chart. So for those that can't see the visual difference between a red line, actually, I didn't even change the color of the other one. But let's leave this 100-period moving average as green, but make it a little bit thicker. And that other one, I'm going to make it red. So there's a visual distinction for most people. If we can't see that distinction, we can see at least the color distinction. We can see the thickness. So let me click apply and click OK. So there's our thin red line, which might be our shorter term to intermediate trend, and the green thicker line. And if that shorter term one is above that longer term one, for some traders, that might just be a confirmation that trend, despite day-to-day fluctuations in price, maybe the trend is still bullish overall. And then maybe the design there is to just try to optimize the entry within that trend. So how do we put this into a scan? Let's go to our scan tool. Let's do, this is not going to be a stock filter. It's actually going to be a study filter. I'm going to close out of that one. And let's go up here and click on add filter and go to study. And I'm going to build this study. I'm going to build this scan. I'll share it at the end. So you can follow along if you like at home, but I'll also include a link. But for this scan, we're going to do a custom filter, not involving the ADX crossover. So we'll delete that default and add our own condition. But basically, we're looking for one study to be above another study. The 50 study is another word that we use for a chart tool or a chart indicator. So let's look for our one study, the simple moving average, with a length of 50 to be greater than, in other words, above our second study, which is a simple moving average, with a length of 100. That's it. Down at the bottom, it's making the requirement that is the fact today. Right now, the 50 is above 100. That's what the one bar means. So I'm going to click Save, and I'm going to click OK. And our simple moving average requirement is that the 50 is now greater than or above the 100. Now, it's entirely possible, because of the relative slowness of even a 50-period moving average, if price starts to collapse, price can go down while the two trend lines are still up, and it can cause us to lag behind things. So let's also make the requirement that price is at least holding in an apparent step with that trend. Let's see what questions we have. I hear the market is rotating out of tech into the financial sector. So why AVGO? And yeah, some traders might have convictions regarding which sector they want to assign, new trade to. That's okay. Sector didn't really play into this discussion, but for some it might. And it might, for the purposes of these demonstrations. It's always for educational purposes only. It's not to say that this is the only way to approach trading. There may be other motivations for different ways that trading decisions might be made. So good question. Just didn't play a role in this one. Okay. Cameron says, where you have volume 100 and 500, should that be close 100 and 500? Oh, you are exactly right. Thank you, Chuck. Yep. Yeah, I had the price in mind. I didn't even make that the requirement of the scan. Yep. Sometimes in my enthusiasm, bring this stuff to you, I can skip over obvious things. So just point it out. Yeah, if you catch something like that, Chuck, definitely appreciate it. Here's what Chuck is talking about. We are looking for a stock metric to be between 100 and 500, but not the volume. We want the market price of the stock. There we go. Yep, there we are. Okay, now let's set that at 100, 500, and we've made that critical correction. Thank you. All right, so just to revisit, we're looking for companies at least $100 billion in size, currently trading between $100 and $500 per share or market value. And we're requiring that their 50-period moving average be right now above the 100, but the concern might be that price is collapsing. And now AVGO has come down. Maybe there is a rotation out of that sector and into another. Maybe that persists, maybe it doesn't. But for right now, at least price is still above the 100-period moving average. And for some, that might be enough technical confirmation of bullishness. Let's build that into our requirement, though, for our scan here. So with that Broadcom, yes, it has come down. And for some, they would say, ooh, there's a rotation out of technology and into some other sector. And maybe they picked, which one did you say? The finance sector. Maybe that's where the flow of money is going. There's probably, if there's some money being pulled out of technology, it's not all going directly into another sector. Probably some other sectors are receiving some of that, and some of it might be going to cash. In any case, so this has brought prices down, but at least price is still above that 100-period moving average, and therefore maybe for our traders, they still are bullish on the stock overall. So I'm just going to make that a requirement of this scan. So let's come back here and put in a second custom study. But in this case, we're going to require of this study, and again, it's not the ADX crossover, so we'll delete that. That's always just a default because it's alphabetically first in order. But let's click Add Condition, and this time we're looking for the price, let's say the closing price, to be greater than our study. And the study in this case is going to be the 100. And there's some logic to that. Notice I'm not requiring that it's above the 50. I am saying above the 100 because for some traders, they actually look for those pullbacks to set up what we call a bounce entry. So when I ran that search for, I wasn't looking explicitly for Broadcom, it was just a product of the search. I was specifically looking for stocks that had pulled down recently, allowing for a break of the 50, but not the 100. So pulling down, but only a certain distance. So let's make that a requirement here. Let's click Save, and we'll click OK. Now, the final requirement that we're going to make is that within our now apparently confirmed upward trend, at least through that 50-100 technical lens, and with price still required to be above 100, let's explicitly look for bounce entries. And that's where price has come down. I'm going to make it a requirement of this scan. So the final filter that we're going to put here is, let's go up to our Add Study filter. And we're going to use one of the default filters, and we'll look at price performance directly. And specifically, we're going to be looking for price to be near recent lows. So price performance near high lows. And for this scan, we're going to look for prices to be within 2% of recent or 10-day, that would be 2-week lows. That's the entire scan. Great big companies trading between $100 and $500 per share with uptrending moving averages 50 above the 100. Price is okay if it's come down as long as it hasn't come down below the 100, and it's trading relatively close to recent lows. Okay, so let's click scan. And as we do, so this is going to produce some results. I'm also going to come up here. I said I would share this scan. So let me just share this. And as I do, paste this into the chat. I have to advise you that shared scans are not guaranteed regarding timing or accuracy. Let's see. Okay, now Kelly, that was something else, just a little kind of a sidebar, just keeping an eye. Randy's saying, wouldn't you want to add volatility? So many other things a trader might decide to add as they're tailoring this to their specific approach to the markets. I will say, with just these 5 requirements, how many companies meet just those 5? There's over 10,000 companies that are out there. There are 17 that meet this relatively limited list of requirements. If a trader starts to look for the perfect stock in the perfect position using the perfect scan, guess what? Perfection is sometimes and frequently not available. So we kind of have to strike a balance there. Okay. Now, if you're not familiar with, I just shared that scan. If you want to open something that has been shared, you go up the little gear here, click on open shared item, you paste it in right there, preview, import. That's how that's done. But as we run that scan, look what comes up. We have Amazon, we have Alphabet, we also have Broadcom. So if you're wondering, when I brought up Broadcom, how was that located? This was the scan that specifically found that stock for that trade scenario, and we placed the trade in that webcast earlier today. But the kind of trade I want to do today, and the one that I'm going to be trading is going to be AbbVie, is going to be a breakout. I shouldn't say today, I should say right now, because 2 hours ago was also today. Anyway, so there are 2 customizations that I'm going to make to this scan. And here's the logic of these. For some traders, within an upward trending stock, for a new bullish trade, and we're going to be doing a bullish trade today, they look for price to pull down, maybe down to or near price floors, and then they place their bullish trade. For others, though, they look for stocks like AbbVie, which are also in apparent bullish trends, but the more recent momentum has actually been in the direction of the trend and maybe pushing up through price ceilings instead of bouncing off of price floors. So we're looking for breakouts rather than bounces. So here's the little customization that we might make for a breakout scan. Now, before I leave or customize this scan, change this scan, we can also save the scan query. I've already saved it. I just gave it a name that was meaningful to me. It doesn't matter what you call it, as long as it reminds you of what the scan's supposed to do. But you can just save the scan right there. But let's modify this one to look for breakouts instead of bounces. And that's just recent price activity. So rather than the price being allowed to go down below the 50, but still being above the 100, let's now require that it also be above the 50. So I'm going to edit this, and I'm going to say that our stock price has to be above the 100, and it's required to be above the 50, even the shorter term trend line. So we'll just save that, click OK. And then instead of the price being within a certain percentage of lows, we're going to look for it to be within a certain percentage, and let's be pretty demanding, within 1% of 10-day or 2-week highs. That's it. This is going to conduct quite a different search, and we're going to get quite different results down here. So I'm going to click scan, and let's scroll down just a little bit here. See what we have here. Oh, there's J&J. Actually, J&J is another one that we spotted earlier today. Let's go have a look at that. See if it still looks like, yep, we have our 50 above our 100. This is, let's just check all the boxes. Is it a big company? It's way bigger than $100 billion. Is it priced between 100 and 500? Yep, it's a $195 stock. Is the 50 above the 100? Yes. Is price above the 50? It sure is. And is the current price within 1% of 10-day highs? Yep. There we go. So that scan has done a very nice job. Now, if you're wondering what these drawings are for, I actually already have an existing position on Johnson & Johnson in another webcast series where we did a long call diagonal, a long call vertical spread on this. That's what that is. Okay. So again, if you want to see the logic of that trade, you can go to the archives for my long verticals and diagonals webcast series. But let's place a trade on AbbVie. Now that we've learned how to look for bounces, now that we've learned how to look for breakouts, we notice our trader might look at this and see we have this upward trending stock. It's among the most liquid out there. It's priced in the range that we were looking for, and it's recently broken above apparent resistance or price ceiling. So let's say that our trader's assumption is, well, maybe it'll just continue higher. It could go lower, and there's a little bit of an obstacle right here in the form of a recent high. That could be a resistance. Good Koopa says, my scan is showing no stocks. You have the same filters. You're in Real Thinkorswim, not money. All I can say is, nope, there's something different there. I know you don't believe me, but there's just the tiniest little difference between the scan that you just constructed and the scan that I did. That's why the results are different. I don't know what it is. I have no idea. So my apologies. I don't know what to suggest to what might polish that up. But another thing is you might just use the link that I provided. In any case, I'm going to hit the pause button here on my presentation before we go place this trade, just to call out the fact that there's a survey that's been added to the chat window here for the live attendees. So if you're here in our live audience, do me a favor, click on that survey link and then fill out that survey when the webcast is over, and you can feel like you can give me some honest feedback. I'll tell you a couple of things about that survey. Number one is it's a really short survey, 2 multiple choice questions, and then a comments box if you want to leave comments, suggestion box if you have any suggestions. But I will just tell you, if you take the time to fill out that survey, I'll take the time to read through the data. I read through those comments, and it's always helpful. All right. So with that said, let's go back and complete our trade. Let's just say that our trader thinks price is going to stay above this maybe 232-ish level. Well, let's just set up a trade that's positioned to benefit if it does. How about we do a bull put spread where we sell the 230 put. Let's carry that out to the November 9th or December 19th expiration. And I think there are $10 wide spreads on AbbVie, so we're going to have to come down here and maybe buy the 220 put. Okay, here's what that's going to look like. Sell the 230, buy the 220. Might look like we might be able to get about maybe $2.50 for that trade right now. Creating a $2.50 credit, potentially leaving about a $7.50 risk on this trade. It is a lower reward but higher probability trade, the way that we're constructing this. So I'm going to come up here to where it says spread single. Let me just change that to vertical. So you can see those 2 strikes paired up with each other. And yeah, it looks like currently priced somewhere between 236 and 277. Maybe the trader's trying to get $2.50 out of this. So I'm going to click on the bid price, and that creates a vertical spread. Now, by default, for my account, it's going to trade 10 contracts. So we'd have the position size for this. Let's say that we do get a 250 credit. That would leave $750 or $750 of risk on the trade. Then the trader can use that to gauge, well, how much risk overall are we willing to take? How about for this example, in my long verticals and diagonals series, I try to keep the risk at about $4,000. So if we have, I don't want a quick chart, I want a calculator. There we go. We have $4,000 to spend and $750 of risk per contract. That would be right at about 5 contracts. So let's just dial this down. There we go. Set that to 5, shooting for a 250 credit, selling the 220 put, buying the 230 put, with the preference for the stock to be above, pardon me, reverse that. Selling a 230, buying the 220. I'd already moved on to the next stage of explanation. Don't do that when you're presenting. But selling the 230, buying the 220, looking for the stock to be above 230 as we move toward expiration, and it's already above 230. So it could even pull back a bit here and we'd still have the tolerance for that. So let's click confirm and send. Going to sell those 5 verticals, try to get a 250 credit. When we enter a limit order, there's always a risk the order might not fill. Maybe we can't get 250. But 250 is the minimum that I'm submitting for this example trade. That would give us a total maximum profit on 5 contracts of $1,250, a total maximum theoretical loss scenario of $3,750, and there is a commission to be paid on this kind of trade. Now, this is where I would normally click send. This is not my webcast series, so I won't be here to follow up on this trade. I'm not actually going to submit this order. I just wanted to put the focus on creating scans on Thinkorswim for spreads. So we've done that. There we go. So I'll just sort of send that one off in the ether rather than actually submitting it. And guys, time for me to let you go. I think we've accomplished what we set out to do today. I wanted to talk through how a trader might conduct a scan, create a screen, find vertical spread candidates for credit spreads. So hope that was helpful to you. If it is, what I would hope that you would do is join me in my regularly scheduled webcast series, which is a Thursday series. It's just a little bit earlier in the day. Rather than at 2 o'clock Eastern time, it's at noon Eastern time. But time for me to let you go. Let me give you a quick reminder of the other educational resources, or just the full range of educational resources that you have available to you from Schwab Coaching. First of all, is if you haven't done it yet, subscribe to our Trader Talks channel. You can go down below the video right now, click on subscribe. It just takes a second. It doesn't cost anything. But this is where we house our playlists, as I've already demonstrated. You can join the live streams right here, and you can even do those keyword searches, not credit, but credit versus debit spreads. Go watch that one. If you're ready to have your eyes opened, if you think that credit and debit spreads are totally different, and you want to see somebody make the case that they definitely are not, you may want to check that out. There is some difference, very slight difference. I'll explain what that is in this discussion, okay? But another thing that I would definitely suggest you do is to follow your favorite Schwab presenters on social media. The camera's not always on. I have 5 webcasts a week, but that still only adds up to like 4 hours of one-to-many contact. But if you'd like to communicate with me in between the webcasts, you need to be following me on social media. So you can follow Rachel at Rachel-CS on X. You can also follow me on X at Cameron May CS. There's my handle right there. And I post things like this little video about how to use the seasonality chart on Thinkorswim. And if you reply to one of these posts, I just reply right back to you, as long as you don't say something that's too hot for me to handle. That's always a possibility. Religion, extreme politics, nope, not touching that. Anyway, you can also follow me now, though, on LinkedIn. So I just have a few followers so far. Just started on LinkedIn a few weeks ago, two and a half weeks ago. So to follow me on LinkedIn, go to linkedin.com/in. That's just sort of the generic LinkedIn address. And then it's /Cameron May CS. And that'll have you on the right guy. All right. But guys, time for me to let you go. Rachel, thanks for helping out Chad. Everybody, this is the last reminder to fill out that survey if you would. That would be fabulous. I'll read through that data in those comments. It's always helpful. Also want to thank everybody who's already clicked the thumbs up on the video. We got 120 people watching the live stream right now. And how many? Final tally right now is 42 thumbs up. Thank you for doing that. That always sounds like applause to me. It's your way of just saying, nice job, Cameron. But it also gives my video a boost in the YouTube algorithm. It lets YouTube know that you liked what you saw. And YouTube will then put it in front of more eyeballs and let more people find these discussions. So that's always helpful. Everybody, thanks a lot. I will see you in my regularly scheduled webcasts. I'll also look for you on social media. But whenever I see you again, until that moment arrives, I wish you the very best of luck. Happy trading. Bye-bye.